Hello everyone and welcome back to its crypto trading channel. In this video I'm going to perform a multi-time frame price action analysis on the situation we are currently seeing on SAND USDT to show you how I'm going to potentially capitalize on the next swing trading opportunity. So Sandbox is another Metaverse token, a gaming token, obviously from a fundamental perspective with huge potential upside. I'm sure you have all heard of people buying land on Sandbox at the moment. This coin has huge potential in my eyes. So let's now get straight into it. As always, I'm going to keep things as educational as possible, starting here on the monthly time frame. Here on the monthly time frame, everything is clearly bullish. We have this beautiful impulse to the upside. As you all know, when the market makes a strong impulse to the upside, you can expect a correction to follow. And that's exactly what the market is currently doing. The market is currently making a correction into this area of liquidity. Why is this an area of liquidity? Because when the market makes such an impulsive move to the upside, retail traders tend to FOMO into positions. They tend to enter trades due to the fear of missing out. Um, Therefore, they enter with high leverage at high prices, and the market will hunt their liquidity before making the continuation higher. And that's exactly what we see here on the monthly time frame. Let's now drop down to the weekly and see what we can see. So there's not much difference here on the weekly, obviously. We have this beautiful impulse and a nice correction. One thing to point out here on the weekly time frame, we do have this candle here with this large wick to the downside. And as you all know, if you follow my videos, when the market prints a large bodied candle like this with a large wick, which is bearish, a lot of the times the market will fill in this wick. And that's exactly what I expect to happen here. If we take our Fibonacci from the low to the high of the recent weekly impulse, what we can see is the market is yet to test the zero point 0.5, the 50% fib, or the 0.618. So I do expect a bit more of a correction to occur before we see the continuation to the upside. We could bounce off the 50%, the zero point 0.5, but I do expect to see a correction to around this area between the zero point 0.5 and the 0.618 golden ratio. Obviously, we have to fill in this wick as well. So this would give us a key area inside of this zone, an area of confluence. Let's now drop down to the daily time frame. So here is the same area I've just identified on the weekly. We can clearly see this is a nice area of structure on the daily time frame. Why is it an area of structure? Because we have this nice uptrend here. We have this clear uptrend from this low to this low to this low, and we have this order block here which the market saw a very strong impulsive move off last time. So I do expect this area to act as a nice area of demand all inside of this area. As I've said, the market is currently filling in the weekly wick. What else can we see here on the daily time frame? We can see this beautiful M formation. So the market has printed this very nice M formation here. As always, no difference. When the market prints an M formation, what we expect to see is the market to complete the pattern at the neckline. This is the neckline of the pattern, which is also previous support where we saw this move to the upside. So when previous support gets broken to the downside, this support will act as resistance, and 9 out of 10 times the market will make an impulse and correction to retest this zone before either breaking back above and net or obviously seeing the continuation to the downside. So on the monthly timeframes, we are bullish. On the weekly timeframes, we are bullish. On the daily timeframe, although we are still in a bullish trend, the price action is currently bearish in the short term because we have broke below this level of support, and we are now in this slight corrective downtrend here on the daily timeframe. I do expect the market to come and fill in this wick as I've already identified and come into this area of demand. All inside of this area of demand is where we will be looking with students to potentially accumulate SAND USDT, first of all on spot, and then obviously if the market satisfies our entry rules, we'll be looking for a valid entry all inside of this area on the 4 hour and 1 hour timeframes to capitalize on the continuation move to the upside. If we just drop back down to the weekly time frame quickly, we will take our Fibonacci from the low to the high of the recent correction. Obviously, this correction could go a little lower yet, so we'll just do it from where it is at the moment. So say the correction does fill in the wick and stop there. We'll take our fib from the low to the high of the weekly correction. The minus 0.272 Fibonacci will be our upside target. Obviously, we have our first upside target already identified, which is the neckline of the M formation. Our second upside target is the continuation Fibonacci level from this impulse and correction. So all in all, I am bullish here on Sandbox. I do expect the market to come into this area of demand and see a nice strong reaction from this zone. If we check our RSI, our relative strength index, you can clearly see here on the daily time frame, the market formed a double top at extremely overbought conditions and now made a healthy correction. Obviously, when the market is this overbought, it is completely natural for the market to come back into this level so we can make the continuation to the upside and continue the uptrend. We will be waiting all inside of this area for the market to provide to us one of our valid entry rules. If the market does satisfy our rules, we will capitalize on this potential move to the upside. Then, if we do break above this zone on the retest, we can then once again capitalize on the weekly continuation move. This is obviously something that we just have to wait and play by ear. First of all, I do expect a very strong bounce from this zone and the market to at least hit this level before possibly continuing higher.